It's a case of wait and see mode ahead of the deadline for the ceasefire agreement, with talks set to resume in Islamabad, possibly later this evening. And ahead of that, we've seen oil prices stabilize around that $95 area, while equity indices continue to push higher. So this is the hourly chart of Brent. As you can see, prices have been creating lots of lower highs, yet the gap that was created at the weekend hasn't been completely filled yet. So it's really difficult to say which way the price of oil will eventually break out. But if there's no deal in Islamabad, then I would imagine that the price of oil could climb back towards the $100 level, and that could invite pressure on risk assets. However, if there is a deal to at least extend the ceasefire, then that could be a mildly positive outcome for risk assets, which could keep oil prices contained around current levels of $95 per barrel. Looking at the German DAX index here, you can see that it has bounced off this area of former resistance and support yesterday following the big breakout we saw on Friday of last week. We tested this area from above and we've bounced there. Since then, the German index has been in consolidation mode like many other European indices. But essentially, the path of least resistance is to the upside from a purely technical point of view, although that could change in the event of a no deal between Iran and the US. In that event, we could see a potential break back below this area of support. If that happens, it would be risk off once more. But for as long as this area holds as support on any pullbacks, the path of least resistance will be to the upside. And from here, I'm expecting the index to climb towards the January high of 25,500-ish, which was a record high, similar to what we've seen in recent days in US indices. But obviously, the European markets are a lot more sensitive to crude oil prices, given that Europe is a net energy importer. So that's one of the reasons why the German DAX index hasn't yet hit a new record high, while the indices in the US have already reached uncharted territories. The euro dollar formed this inverted hammer candle on Friday. I have marked the high and the low with the purple lines, as you can see on the chart. We broke the low of the inverted hammer candle yesterday, and the breakdown didn't hold for long. Instead, we rallied to close in the positive, printing a bullish hammer candle. Today, we are testing that same level again, and it's possible we could see a bounce from that level where I think the bears might be trapped. So that's a key level of support to watch at 117.60 to around 117.50 area. Should we post a daily close below that level, then this could pave the way for a potential move towards the 200-day moving average and prior resistance and support at around 116.70 zone. Below that, this area of support comes into focus next between 115.78 to 116.05, marking the point of origin of the breakout. On the upside, 118 is the next area of resistance until 118.30-ish. I've shaded this region in the chart. We've already tested that zone last week. A potential breakout above the zone could be on the cards in the event we see a deal between Iran and the US this week, which if it happens, the immediate target would be the high from Friday of 118.50. Then above that, we've got 119, and then the 78.6 Fibonacci comes into focus ahead of 120 psychologically important level next. For more market updates and insights, head over to the news and analysis section of our website, FOREX.com. I'll see you in the next one. Take care. Bye-bye.